Yeah, I think generally not just for Europe, but for a bunch of countries, there's still a lot of uncertainty from the trade deals that could be struck. I think one issue is that for a number of countries, they're not really willing to accept this baseline 10% tariff. They're like, well, why are we being tariffed at all? So that will make, I think, the negotiations with the U.S. Much more challenging. I think Europe also has a lot of internal issues. It just takes a longer time to push through any legislation or any decisions or reach an agreement on the tariff levels that are likely acceptable. I think if the U.S. keeps a 10% baseline tariff on Europe, Europe will likely retaliate in response to that. So we just got to see how that pans out. There's also a NATO summit coming up later this month, so I think we'll likely wait for that before we see some sort of deal being struck between the U.S. and the EU.
So a couple of big catalysts to watch out for. Nora, let me take you to China, where we've seen authorities now initiate both fiscal and monetary stimulus. Just this morning in the readout to you, just seeing that the central bank has cut its key lending rates in China. To what extent are their initiatives, though, actually translating to stronger economic growth in China?
Yeah, so we've seen an increased fiscal stimulus and fiscal package late last year, which has worked its way through the economy and helped to boost growth in the first half of the year, close to 7% annualized pace. But that's now starting to fade out. I think one issue for China is a lot of the stimulus that they have implemented remains very focused on boosting production as opposed to consumer demand. And therefore, the imbalances in the economy are still persisting. You have this excess production and excess supply that is running well ahead of what the domestic economy would like to consume or invest. So you have this imbalance, which is therefore putting downward pressure on prices. And that deflation pressure is persisting. Now, we are likely to see some improvement in the outlook. We had expected China growth to slow very sharply towards 1-2%. That's now likely to settle closer to 3% as a result of the reduction in tariffs.
Are the tariffs overdone? I mean, I'm reading this interesting report about how the Chinese have been so nimble in getting products onto ships, and effectively the word fraud was used. And the allegations were that some of the sellers are simply just bundling up the goods, putting a fake label on the price, so they're not having to pay the tariffs. And if they get caught, they just set up a different shell company. So they just keep on moving so they cannot be caught. And the reality is, in that situation, while it is illegal under these US tariffs and the export agreement, the Chinese are still getting around it. So could we still see some decent numbers for some of these big merchant players in the Chinese market?
Yeah, so this is something we saw during the first trade war, trade tensions in 2018-19, whereby U.S.-China trade declined significantly due to tariffs, but you saw China continuing its shipments to the U.S. via other economies. These are so-called transshipments. And we're seeing something similar this time around as well. So China's exports to other EM Asian economies, whether it's Malaysia, Singapore, Vietnam, are actually offsetting almost entirely the reduction in China trade with the U.S. So a lot of those exports are still finding their way to the U.S., but not directly from China, but via these transshipments. A key question now is, will the U.S. administration clamp down on these transshipments? And therefore, I think the risk is that tariffs on a number of EM Asian economies could go back up from the current 10% rates. Maybe not all the way to the Liberation Day levels, but I think that's the risk going forward, is that those tariffs actually, after the 90-day pause, increase again.